First, a couple headlines from the games industry. Call of Duty Black Ops 6, we're on 6 by this point, is the biggest release in the franchise history. Little quote, Call of Duty Black Ops 6 is the biggest 3-day opening sales in the 20 plus years of the franchise. Microsoft announced earlier today on an earnings call. This was from yesterday, so not quite today. Satya Nadella, Microsoft CEO, said, last week's launch of Black Ops 6 was the biggest of the Call of Duty release ever, setting a record for day one players, as well as Game Pass subscribers added on day launch. That's important. They're trying to push that really hard. And unit sales on PlayStation and Steam were up 60% compared to Modern Warfare 3, which was last year's edition. Interestingly, Microsoft doesn't give exact numbers for what this release means. It looks like it's something to the tune of 50 million plus sales, but those numbers are not officially described. The interesting sort of differentiation here was that this is a product that was developed over 4 years, where usually they do a 3-year cycle to get them out as fast as possible. Seems like actually putting an extra year in to get the product polished is a good idea. So that's all very exciting. Warren, are you a Call of Duty player?
I am absolutely not. I'm horrible at Call of Duty in any game that remotely resembles Call of Duty, but I do think there's a few interesting things here. So this is a Game Pass release, right? Mm-hmm. I've been talking a lot, we were chatting earlier this week about how there's this kind of like bifurcation in the console wars now, where the big wins from Xbox are increasingly based on the owned and operated studios within the Microsoft sphere. And this is a great example of that. You'll notice in the numbers that were dropped, revenue numbers, right? Because most of these are probably players playing via Game Pass. But it is what's keeping Xbox, I think, competitive, because on the other side of that, we've been seeing more and more titles that are either PlayStation first or PlayStation only. In my household, we all want to play like the remakes of the Final Fantasy VII, and those are not coming to Xbox anytime soon. So we're seeing this kind of bifurcation where Microsoft and their sphere is all in on these owned and operated. We saw this with Starfield. We're seeing it again with Diablo 4, and we're seeing it again with Call of Duty Black Ops 6. They need these first-party hits to keep the value proposition differentiated and give people a reason to keep an Xbox in their family, because otherwise, for third-party, PlayStation has clearly been winning just based on install base, and I think developers are biasing their development priority for PlayStation for this. So we're just seeing like a real bifurcation of strategies here. I don't know who's going to win out in the end. I'm still an Xbox and Game Pass loyalist. I think you can't beat the value. And when hits like this come out, even though this game's not for me, I think it's what makes Games Pass really sticky. And we've talked a lot before about how Microsoft is big enough that they can take a loss on this for years to own part of the player base. And I wouldn't be shocked if, as big of as Call of Duty Black Ops 6 is, if it's also like a loss leader in just getting adoption of Game Pass and the ecosystem.
Yeah, I don't know I imagine this game is probably profitable I think it's probably one of the most profitable franchises there is. But that being said, I do understand that their key goal, and they just reorganized Satya Nadella's pay package so that Xbox Live subscriptions is a component of his pay package. Mm-hmm. So it's very clear that this is the thing that they're investing in for a long time. We've talked about the economics of this from a player's perspective. Value is incredible. Interestingly, so I wanted to do a little quiz. Don't look at the outline for this. Do you know what the top 5 franchises of all time are, Warren?
For just gaming overall?
Games overall, top 5 franchise in terms of sales. And this is going back to the beginning of gaming.
I'm going to throw out Call of Duty because I'm just assuming that
Call of Duty, number 2. Number 2.
Okay. I'm going to throw out Pokemon.
Number 4, Pokemon. That is correct.
I'm going to throw out, this is a bit of a wild card, but I'm going to throw out Dungeon and Fighter.
I don't know what that is.
It's a huge franchise in Asia. And then I'll say, does Mario count as a franchise?
Mario counts as a franchise, and according to Wikipedia, is number 1 with over almost 1 billion units sold.
All right, so I'm 3 for 4, and I get one more guess. I'll say the Halo franchise for my last one.
No Halo franchise. You did miss 2. 1, Tetris. Still going strong after all these years. Okay. Number 3, Tetris with 500 million-ish sales. And number 5, which I think will very likely catapult up this list next year when it releases, GTA 6.
That makes sense.
So just really quickly, top order: Mario, Call of Duty, Tetris, Pokemon, GTA. So, congratulations to the folks at Activision. Call of Duty continues to be a behemoth. We're rolling on to decade 3 of Call of Duty, and they continue to crush it. So, this is where, when Microsoft made the big acquisition of Activision Blizzard, people were a little skeptical, but, they needed first-party content. This is the strategy. We'll see. They're willing to invest for the long haul. We'll see if it makes sense over the long term. Okay, so a couple more quick headlines that I want to roll through. These are just sort of a snippet and taste of what's going on. And we want to talk a little bit about the Electronic Arts earnings as well. So video game publisher Electronic Arts reported revenue ahead of Wall Street's expectations in Q3 for this fiscal year. The sales are up 5.8 on the year over year to 2.03 billion, exceeding estimates by 2.5%. Revenue beat estimates. EPS was up by 25%. That's earnings per share, basically profitability. And their EBITDA was about a 5% miss. Now, that's all good, right? EA, one of the largest publishers in the West, huge franchise. Now, this is the thing that I think is interesting and I think is more representative of the overall ecosystem, which is EA expects a significant year-on-year decline of 17.6% next quarter, with analysts projecting a 5.1 revenue decline over the next 12 months. So good year, beat on the top line, but going forward, they're guiding down. And that I think is a thing that's really interesting. And I'll read one other article quickly, but like I think when we take a step back and talk about how we feel the industry's doing, it's like this is kind of the key thing. Is like, yeah, it's good. We're limping along. We're doing well. There's growth, but we're not projecting gangbusters growth like we have been for the last couple, decade or two.
Yeah, I wouldn't be shocked if we see a lot of this trend. And I think, development takes a long time. So we have to kind of look at what were the actions in the couple of years preceding, because that's going to inform the pipeline, which is then going to inform the revenue. And we've talked a lot now for like the last, basically, post-COVID gaming had a huge boom. And in the couple of years post-COVID going back to normalcy, it's been a painful time for game companies. There's been layoffs everywhere, closures of studios, decreased funding in new studios. What that means is less development happening and less games coming to market. So I don't know the details here, but that's what I'm guessing is leading to them going from a good quarter now, which was funded by probably development that some of those teams might have been downsized, or some of those other products that were initially queued to come out these years could have been canceled as these big companies have been tightening up their development and how much they're investing. So that's my hunch here. I don't know, Xander, do you think that's off base?
I think that's right. And I just wanted this is sort of like the more moderate mid-level expectation. And I wanted to read another article that we'll touch on from a company called DFC Intelligence. Now these guys they're analysts, they sell their reporting. And so this is maybe a bit of a headline number. They're trying to make the industry bullish, but this is what they're saying. According to IDF Intelligence, video game industry poised for strong 2025 rebound. A little quote from preview of their upcoming report. While the pandemic initially boosted the market tremendously, it's been trending downward since the early last year, with 2024 representing a chaotic nadir that included mass layoff, extensive closures, and acquisitions of small and mid-sized studios, and disappointing hardware and software sales. We expect 2025 to mark the beginning of a major upswing that will last at least through the decade. DFC Intelligence. This is just a preview of their report that's dropping in December. I think it's just largely marketing material to get you to download the report in December, but it is a sort of interesting indicator of where analysts think the industry's heading. They call out specifically 5 segments. They say they expect record market growth across the PC and console video game segments. They've noticed in the back end of this year, and they expect to see on a forward-going basis increased spending on hardware. They expect a new console cycle within the next 5 years. They don't really break out what exactly that looks like, but they expect there to be increased console spending because of the new consoles. And then they also talk about how in the PC consoles landscape specifically, there's a shifting towards live ops, which they assume is going to increase revenue. And then they have a bucket called battle for distribution. Not really sure what the implication is there. But anyway, that is to say that there are some folks who are saying that we think that we are in a point where we have sort of leveled out with our stagnation and decline, and we will see increased growth going forward. And now I will just very briefly throw up this chart. This is where I'm slightly skeptical of this. You are here. This is my favorite chart that comes from every analyst. It's like basically we were growing, then COVID happened, now we're downsliding, but don't worry. Starting tomorrow, the chart is going back up and to the right. And so this is what one analyst says. I'd say color me skeptical. We think the reality is probably a little more bloodbathy than this. At least that's my take. But any thoughts on this very short summary of a report, Warren?
Yeah, I'm somewhere in between on this. I mean, I do think that maybe the max pain period is coming near an end. Not to get slightly dystopian, but I do think over time, gaming is going to only occupy a higher and higher percentage of human time as we get more into the era of automation and AI, and people have less manual things we need to do with our time. And obviously, as co-founder here at Uptick, I'm betting big on gaming as a sector, so respect the source, I guess. But I am skeptical that immediately after today, things are going to rebound. In line with what we talked about development cycles, I think it might be something that's more like 2-3 years out that we really start feeling healthy again.
And we've looked at other analysts, I don't want to call it out by name, but we've basically seen the same chart for mobile.
You're right.
You're like, everything was going great, it crashed, and now we're at the bottom, and it's going to go back to be great tomorrow. And it's like, we'll talk about what we see in the ads, in the marketing side of this. Part of this is a consolidation and marketing problem as well. And we can talk about that in the next section. So just sort of wrapping up, that was some of the headlines. Let's talk a little bit about the vibes, the important things, what you guys come here for. I mean, I think my belief that the industry is fairly in line with headlines, which is to say, we're not in a consistent or vigorous cyclical uptrend, and we are in a more saturated market, right? And so growth is slower, steady, but slow. And I think that's kind of what you just said. It's like, this is in games for long haul. I think there's obviously tons of good businesses to be here. I'm an avid game player. I will likely continue to increase the amount I spend on games over time, but this is not the Wild West. This is not, mobile in the early teens, right? And so I think, I was at a couple of conferences last week and the week before. There are some people raising new funding, so that's good, right? There's like new money being injected into the industry, but it's a pretty tepid environment. Even the people with a lot of funding are very, very cautious about the way they're planning to deploy the funding, and I think that's indicative of a different mindset than the 2010s. Budgets are pretty tight right now, and I think people are generally being cautious with new investment. So that's overall sort of my take on where the industry is. I warned you disagree, or do you have any other additional thoughts?
No, I think that's right. I mean, we talk to a lot of teams, like we work with some of the biggest companies in gaming, but we also work with a lot of startups that are trying to ship their first game. And as you said, Xander, funding is finally starting to open back up, but we've seen a lot of companies that were like losing the next round that they're expecting, like losing a lead investor that, pulled the rug from under them. And also just talking to a lot more younger game companies that are very open of saying, like when they get on a first call with us of like, hey, we only have X months of runway left. Like, we need your help in just sort of proving that we have something here before our runway expires. And I think that that's just it's more frequent, and also just the direness of some companies' situations with the lack of stable long-term funding is definitely a theme of this period.
Cool. That's the vibe check on the games industry. We're going to transition over to the marketing industry, which seems like they're doing okay.
Strap in for November and December 2024. I'm really curious to see how this is going to be doing for our portfolio. Right now, everything's doing pretty good from a performance standpoint, but I'm curious how hard the brands are going to go. This is usually when we start seeing like the cost of inventory super get jacked up. Yeah, so I don't know. It's game on, basically.
Great. Game on. Let's play.
As always, the pod is brought to you by Xander and me over at Uptick. What's Uptick? Uptick helps games grow. How do we help games grow? We do the work for you, with you. We do user acquisition of all types. We do performance marketing. We do community marketing. We work with content creators, or KOLs as they are called, that I learned about 2 years ago, key opinion leaders. We do all this stuff, and we measure it all. Measurement is super important, and we do all this measurement with our platform. If you can't afford to have us be your team, we're really good, but we're not cheap. What is pretty cheap is using our tools. You can use the same tools as us. It's called the Uptick Games Growth Platform. And you can use all the same tools that our engineers have built in-house to give our team the edge with the games that we've been able to really scale profitably. And you can now use those for your team too. So if you are building a game and want to do it better, there's a fair chance that we can help you with that. So reach out through our website. It's uptick.com, UPPTIC.com.
Talk soon. Happy Halloween.